You know, we live in a bigger state and a bigger world, both of which have different tax structures, and both of which, frankly, tax local properties, or treat, I should say, sorry, local property taxes very differently. And in this area, I'd say commercial taxpayers have extremely significant tax advantages over residents do. So if you look at it for local property taxes, commercial taxpayers are always able to deduct their local property taxes for federal and state tax purposes, whereas opposed to residential property owners are sometimes able to deduct their local property taxes for federal tax purposes. I would point out, that local taxes are not deductible for many senior citizens who don't itemize. So if you don't itemize, basically you get no marginal benefit of. I'll take that at the end, sir.
They are permitted to deduct them. In this current year, real estate taxes will be deductible whether you itemize or not.
For federal tax purposes?
Yes. Just want to correct you. They will have a deduction for it on their federal taxes, whether they itemize or not. We could hold that, and I'd like somebody to try to provide us the data.
Yeah.
We did not find that data, but please don't.
Local property taxes are also not deductible for any resident who pays the alternative minimum tax. And for those who know what that is, it's a hideous tax that was implemented in 1967 that was expected to apply to 167 taxpayers across the country. By 2010, it's going to apply to 30 million taxpayers as a result of the fact that Congress never indexed it for inflation. So basically what you do when you pay the alternative minimum tax is you calculate your tax two ways and you pay the higher of the two. And for one way, you get to deduct your taxes, your local property taxes, and for the other way, you don't get to deduct your local property taxes. So by virtue of basically paying the higher of the two and not being able to deduct them on one side, you don't deduct them for anybody that pays the alternative minimum tax. Residential property taxes are never deductible for state tax purposes. So let's go on to the next one, which is the federal and state tax implications of local fees. And I think this part is relevant, to be honest with you, because we need to be honest with ourselves. Then maybe we put it down in the box at the bottom, and maybe we should have put it at the top. But when we have overrides and they fail, sometimes we spend the money, sometimes we don't. And when we do, we call it fees and we don't call it taxes, and we all tell ourselves, geez, we're being really prudent. But the reality is the distinction between fees and taxes is very substantial with respect to federal taxes. I should say for federal and state taxes. Fees that are paid by commercial property owners are always deductible for federal and state tax purposes, and fees are never deductible for residents for either federal or state tax purposes. And so, like you said at the bottom, when overrides are voted down, some of the costs get covered by increase in new fees. And I think for those that live in North Reading knows that we've done a fair amount in that regard. I know Mr. Webster and I have talked about this at points in the past in the school side. What's the number, Mel? Is it over? I know it's over $500,000 in fees that we have. Well over $500,000? Well over $500,000 of fees that used to be taxes, which are now fees. They're allocated exclusively to residents, and basically they're not deductible by residents. So if we could go on, Mike. So I'd say, you know what, the reality is we have a split tax rate today, because what's relevant is really what's in people's pockets if they're business owners or if they're residents. What's available to people after taxes to basically support their families and live their lives. The reality is we have a split tax rate today, but basically it's the residents that pay a higher rate than commercial owners. And that's true because of the state and federal tax implications and our continued trend of adding fees, which I, for one, don't necessarily see FY10 coming and going under any scenario without added fees. Maybe folks will surprise me and I'll be wrong, and I'll be glad to admit that I was wrong, come back next year and I'll be glad to say that. But my guess is we're going to have some added fees, and the added fees are only going to serve to widen the existing gap, which has been trending in a way such that basically commercial property owners on an after-tax basis are paying a lower rate than residents are paying. So we go. So here's what we're asking the Board of Selectmen to do. And We're asking them to implement tax classification and split the rate. We actually are asking them to reallocate $768,141 from the residents to business through a 19% shift. The assessors can check my math, but I looked at theirs and they did, 10% increments in 25. I'm pretty sure this math is correct. The resulting residential rate would go from 1204 to 1171, and the resulting commercial rate would go from 1204 to 1433. That amount represents 2.5% of the town's FY08 levy limit, approximately. The closest I could get on basically an even number shift. So if we were to do, well, if this had been in place in years past, and I don't know what other communities are doing, so I can't tell you what that means with respect to 2009. I can tell you what that means with respect to 2008. And if we had done this last year, our residential rate would go from the 4th highest to the 5th highest. So we are not, in my mind, looking to artificially soak the businesses and subsidize a very low residential rate. We're still willing to pay our share, and arguably then some. We're looking to have this in place and move the commercial rate from the 5th lowest to the 8th lowest. So instead of being advantaged relative to 3/4 of the surrounding communities, our business community will still be advantaged relative to 2/3. They'll be advantaged by a little bit less, but they'll be advantaged. Now, you might say, what's the impact of this, by each individual category within the town's tax base? And I want to talk about the median for a second, because the median is different than the mean. And the median says, at what point do 50% of taxpayers pay more, and what point do 50% pay less? Which is much different than saying, what's the average if you have a lot of really high-end properties. So if we're looking at how does this impact the potential small business owner in this community, I would argue the median is a much more relevant number to look at than the mean. The median impact on industrial property owners in this town will be $547 as a result of this 19% shift. The median impact on commercial property owners, $807. Personal property owners, $10. Personal property taxpayers, $10, and the residents would save $136. You might say it's $136. Geez, what's up with that? Well, the reality is that to me is an indication that this is a modest proposal. This isn't trying to go to 50%. This isn't trying to really soak, quote unquote, soak the businesses. This is an attempt to get a little bit more equity in terms of where the town distributes its taxes. One more slide I think I have, which just shows the complicated math slide, which shows the effect of a 19% shift. I would also add that the selectmen have the discretion to go from 0 to 50. So if I've convinced them really well and they want to go above 19, that would be fine with me too. But 19 is what we're asking for. And it should be noted that this is a much this chart down at the bottom deals with means as opposed to medians. So the mean industrial impact of this would be $3,330. Go back to the prior slide, Mike, if you would, and focus on the industrial of 547. So that suggests that the mean, the median, no, sorry, I gotta get it right. The mean is almost 6 times what the median is, which means this is disproportionately being shouldered by a small number of very large taxpayers in this town. This is not going to be disproportionately hitting the small business owners. This number is a median on this page, and the reality is that means there's 50% more and 50% less. So if you're really small, your number is going to be a lot smaller than this. Yes, ma'am.
Through you, Bob.
I don't have it jotted down. I know the assessors have that.
Median value for what? For commercial?
It's her question.
For commercial, the median for commercial is 353, 100.
So your assessment, 353, 100, your taxes will go up the assessment. And then increment essentially
Okay.
So we tried to make this as quick as possible so we could leave a lot of time to discuss this. Okay, because again, I want to make sure as we go into the closing here, especially our business community understands that we don't have a lot of good answers. And so we welcome the help to help us find better answers. If you don't like this idea, then help us find some better ones, because I have a lot of great people on my committee and we're struggling every day to try to help find solutions for this selectman to help steer the ship in a different direction. But I think today you have an opportunity to take this ship and steer it in a new direction, because I'll tell you, this town needs change more than ever. And today you have an idea in front of you that can actually do that. The senior citizens in this town need some help, okay? I know $136 doesn't sound a lot, but you go and ask those people that have been filing for the foreclosures and the senior citizens that have been trying to pay their trash bill. This is important to them, and I reach out to the business community to please support this, because they need it. So in closing, we're not asking you to do something any more than what is required by the other towns around us. We're just looking for greater equity here. And we're not trying to put the small businesses out of business. I am a small business owner 3 times over. So I know what it's like, and I live their pain every day. But I still think this is the right thing to do. We're trying to, we just want to share the burden with our business community, and I think Mike has really put out some good examples. When you looked at the fees, and you talk about the fees, I'm sure there's other people in this room that can give you a better idea on the amount of fees that our residents have been paying because the overrides have failed, but the cost didn't go away. So we're just asking for some shared burden. As a business owner, there are a lot of IRS tax advantages as a business owner, and this is one thing I know real well. So all I would ask is, if you don't like this idea, then somebody go work with the IRS to try to make the tax advantages equal for residents, because they're not. There's a lot of deductions that I get as a business owner that residents don't get. And they're pre-tax dollars when you pay those tax bills, where residents use post-tax dollars. There's a big difference there. So please keep that in mind when you're making your decisions. Residents, again, need relief. I can't emphasize that enough. Board of Selectmen, you have an opportunity tonight to make a change, to put us in the right direction. We have a heck of a hill to climb for FY 2010. And tonight, yeah, you're at a crossroad, so I'm going to ask for you to please support this idea. And again, thank you all for giving us the opportunity to at least voice this idea, and we are welcome. Mike and I are ready to take on any questions. And I could leave it at this. This is not personal. Please don't take any of this personal. We're trying to do the best we can, so please work with us to try to help us. If we didn't have the right data, then we're missing something. We're not perfect, so help us fill in the blanks. Okay? So we'll open it up for questions.
All right, thank you, Mike. Questions from the board first.
Yes,
Joe.
thank you, Mr. Misery. Question for either one of you gentlemen. Could you explain to me a little bit more on the alternative minimum tax? What that is, and you said it's gonna go up to like 300,000 or 30,000 people?
It's actually expected, the alternative minimum tax is basically a parallel federal income tax system. When you get to it, it disproportionately affects higher income people that actually live in high cost of living in high tax states. Massachusetts is very high with respect to the impact of the alternative minimum tax. What it basically says, as I mentioned before, is that you calculate your taxes under 2 methods, and you pay the higher of the 2. The problem it was literally created in 1967, I believe, to make 160 people nationwide pay some taxes when they had used excessive trusts and excessive loopholes to not pay anything. The limits on which it then kicks in were never indexed for inflation, and they continue to not be indexed for inflation. So basically, when you compound inflation over 33 years, or however long it's been, it's projected to impact 30 million taxpayers nationwide by 2010. So what it means is that if you pay the alternative minimum tax, and I paid it personally for 4 or 5 years, it means you don't get to basically it means you don't get to deduct your local property taxes, because you're paying the higher of the 2, and in one calculation you don't deduct them, one calculation you do, and when you pay the higher of the 2, if you're not deducting on either side, you're not deducting your local taxes. And that's the reality, and it's going to continue.